The Taiwanese index is the only outlier in what otherwise is a red-looking screen across the Asia-Pacific.
Nifty Bank managed to, just about managed to creep up above the 20-day moving average, and we ended slightly above it.
They have revised the order and now has asked the company to cut the number of flights by 10%.
So 25,870 is where the Nifty is.
The broader dynamic here is about us getting back towards a mid-teen pace of growth compared to it being absent, right?
The entity which we are acquiring, is sitting with a 16 million of cash already, as a part of the deal itself.
Meesho, that's a 50% jump on top of what they sold the IPO at.
Especially in case of silver, 4% of gains in the overnight markets.
We foremost focus on free cash flow as the metric.
The Nifty and the Sensex, both of them very off the highs of today.
We've taken the everyday tools that people are using and built the co-pilot system into that.
Let's see if the two sides are able to conclude a trade agreement by the end of this year.
After that sell-off, there was some recovery from the lows, almost 60 points from the lows of the day. But yes, the mid-caps, they continue to underperform.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me, Rima, as well as Surbi. Well, guys, not too great times for the market, getting a little bit jittery at higher levels. But I think important that today we defend that 25,700 odd level, because on a day-to-day basis, we're making lower lows, which is a bit of an issue. We need to reverse that trend.
We've declined every single day of this week, and now week to date, the Nifty is down in excess of 1.5%, almost 1.6, 1.7%. Midcap index is down about 2.2, 2.3%, and the advanced decline ratio, again, tilting in favor of the declining stocks.
And that's such a reversal from yesterday, because yesterday at least you could say the broader market is doing well. But today you don't have that sense of ease at all. I mean, there's a big slide right now. The midcap index, it's down a whole 1%. And even sectorally, if you take a look, it's like an all-fall down kind of a day. Barring the metal side of the market, really nothing is holding up. And as we speak, things are pretty bleak. Just in terms of the sectoral participation, there's a fair amount of selling in IT, there's a fair amount of selling in financials, a lot of capital market stocks are coming under pressure as well. So, it's tough to find the silver lining today.
Well, I think the problem is that the market is bracing for a hawkish cut from the Fed. So, that could explain some part of the selling. And the other problem is that the individual investor, as the data suggests, the last few months they've been selling. More than $3.5 billion is what individual investors have been selling. And that's a complete reverse of what we saw earlier. So because of that, towards the end of the year phenomena, there is a clutch of investors that's taken this call. They want out. And that's why you're seeing some, this sort of selling, particularly in the broader markets, because as we know, individual investors will be more in the mid and the small cap stocks. And that explains why that index is actually underperforming, which is telling you why that kind of pressure on the broader markets. But I think headline index awaiting a hawkish cut from the Fed. If it's not hawkish, maybe the headline index sees a bit of a recovery. That's my view.
I've heard a lot of margin trading, unwinding is also, MTF unwinding is also
1.1 lakh crore.
I think the peak in 1 trillion was the peak in September. And now off late, the weakness that we're seeing, mid-caps, EMS companies getting hammered. Look at Dixon. Dixon high, 52-week high was 19,000. And now it's sub 13,000 and moving towards 12,500. So basically, all these stocks are seeing major unwinding, 6.5% gone on that. And that is the culprit behind the mid and small cap.
Let's not forget Keynes. There's some respite coming in and finally it's found its ground and all that. None of that, look at it today, 9.5% gone again. And the cut is just deep.
That MTF book has a cascading effect actually, because in March it was 65,000 crores. Then gradually as the market started recovering, that has gone to 1.1 lakh crore. And it comes with a one-day lag on the NSE itself. So, today's file will be for yesterday. So as we start tracking that book, it needs to come down a little bit. That's precisely what took place in February as well as March, when that, the MTF book came down from 90,000 crores to 65, 68,000 crores. And that's when we saw the broader markets recover. So we'll have to see some kind of cooling off on that from 1.12 lakh crore. And then, in fact, we'll progress as well. But let's kickstart the show, guys.
Indeed, let's tell our viewers what we've lined up for you on Closing Bell today. 1 hour to go, and it's a down day on Dalal Street. The Nifty's dropped below 25,800, inching towards 25,750. Broader markets underperform. Midcap index down 1%. Pharma and metal counters in the green. Financials, ITC selling pressure. Shares of Meesho make a bumper D-Street debut with a 46% premium to its IPO price. The management voices intent to focus on free cash flow excerpts of that chat coming up in just a while. And food delivery and e-commerce major Swiggy bankrolls their 10,000 crore QIP, proceeds to be used for what is being called the most aggressive expansion phase so far. The stock extend gains. And the silver lining today, Surbhi, is in the silver prices. Record silver prices, and hopes that the final rate outcome from the Federal Reserve sends shares of all the metal counters higher. Splendid gains seen on Hindustan Zinc, the only listed silver play. But how should you position yourself in the last hour of trade? Mitesh Thakkar now joins in from Bonanza Portfolio. Mitesh, the start of trade was so much better. And there's been a lot of volatility, but the general direction of the market has been on the way down. From here on, what's your sense over the next 2 days as we wrap up the week, and what will the trade be?
Yeah, so a couple of things. One, I think, yesterday the low was around 25,720, 728, and today I think it's 25,734. And if you go back a little bit, I think between the 11th and the 12th of November, we had a gap around this 11,720 level. So I think if it breaks 11,720, 710, then we might see this decline kind of accelerate and head towards, and we can see the Nifty, head towards 25,500 as the first target, but 25,375, 380 as the logical target. So in that sense, 25,720 becomes a very important level for me. And in case we hold on to this, then we might actually, attempt a bounce back to about levels of 25,970 to about 26,000.
Okay. And Mitesh, what about individual stocks? What are you doing in the last hour?
I have one buy and one sell. So on the selling side is Punjab National Bank PNB with a stop just above 120 for targets of 111. And ICICI Pru, that's a stock which is given some kind of price volume breakout. So buy here with a stop at 632 for targets of 665.
Okay. All right, Mitesh, thanks very much. We'll come back to you, a little later. For the time being, let's just map some of this big mid-cap sell-off that we're seeing. It's all over the place. And I'll just give some examples. We, of course, discussed something like Dixon and Keynes. Beyond that, look at Physics Wala. The recent listing is down 4.5%. Look at Paytm, down 3%. You've got Latent Fuel losing about 5.5%. So, there's Schneider Electric, 3.5%. Lots and lots of stocks which are dragging their feet. So, plenty of selling going on in the broader market. However, it's not all gloom and doom. Since we've been talking about so much of the red side of the screen, let's tell you what's on the green side of the screen as well. And that has to be Meesho, today's listing. Actually, both of today's listings have done really well. Meesho actually is still holding on to a gain of 50%, 53%, 170 on Meesho. And the other listing of the day, Aegis, which is a company that is a big supplier in the aerospace industry. That stock's also up about 22%. So the listings have done well. Okay, let's put the spotlight on Meesho in particular. What is it that has inspired this 50% kind of a day one pop? We've got Mangalam joining in. Mangalam, I guess one thing that was always working for Meesho is that, and I remember we discussed this, since the company was not profit-making, I think maybe the pricing was not that aggressive, and that's what the street seems to be rewarding, perhaps?
Well, there are three major reasons why Meesho saw the kind of stellar listing that we've seen in an otherwise gloom and doom sort of market. What are those three things? The first one, obviously, there was strong demand for the issue. The overall subscription was around 79 times, led by QIBs at around 120 times. We saw decent demand coming in from HNIs as well as retail as well. The second part was, one, that it's a very unique business model, a truly Bharat-based e-commerce app. If you look at it, there are 87% of their users that come from outside the top 8 cities, 55% women. At the same time, they don't charge a commission to buyers or sellers or a platform fee, and they make most of their money from logistics as well as advertising. And there too, there is scope for margin improvement going forward, as the management had told us. The third most important part is that their financials, while they've been reporting losses on the EBITDA and net profit front, the company has been free cash flow positive, and that's the metric that they've been highlighting ever since the issue came out as well. Last year, they did a free cash flow upwards of 1,000 crores, and they believe this is a number that will grow. So long as the net merchandise value, contribution margins as a percentage of merchandise value grows, and the free cash flow for the company improves, along with the new revenue streams that they're seeding, they believe that all the other markers like EBITDA and net profit will turn going forward too. At the same time, the global benchmarks for contribution margins are close to 8 to 10%, and we have a fair amount of headroom for growth as well. 700 million smartphone users, only 240, 250 million of them shop on e-commerce apps. So truly, a unique business model with decent financial performance so far compared to the stage of life that they are in. And all of that, despite a 60% up move that we see, if you look at their price to sales multiples, it's somewhere between Swiggy and Trent. Meesho is at around 8 times. Eternal, Lenskart are 11 and 14 times. Obviously, DMart is around 4.5, 5 times as well. It doesn't make the kind of profits that all these companies make, but obviously on a free cash flow basis, that's a lot more comparable. And that's why the stock is doing extremely well, holding on to.
I think on the path to profitability, as we have kind of been mentioning, we foremost focus on free cash flow as the metric that we look at. I think over the last 2 years, if you look at it, we have been free cash flow positive. Last year, we generated close to about 1,000 crores of free cash flow. If you include interest income, excluding interest income, about 600 crores. So I would say that the way we have also built our business has been disciplined in terms of capital efficiency and capital discipline. And I think as we continue to make more progress on some of our monetization levers, be it ads, logistics, some of the new ones that we are working on, we'll keep making more progress towards our other profit metrics as well. The way we have built out Valmo is to kind of serve one purpose, which is to be the lowest cost provider of logistics in the country to us. And that kind of continues to hold true. So we don't expect, or we don't kind of aim for any percentage number in terms of how much of our volume should go to Valmo or any other partner. I think we're most focused on bringing the cost of serving customers and sellers down every single year, and happens with Valmo, happens with other partners. We're actually okay with both. The objective function is cost. So whatever helps us bring down the cost, be it Valmo or any other partner, we continue to kind of work with them and broaden the logistics ecosystem.
What a blockbuster listing Meesho's had. Sudeep Bandyopadhyay, market expert, now joins in. Meesho, around the time of the IPO issue price, the valuation was about 5.5 times price to revenue, price to sales. Now, after the up move, Mangalam just pointed out that it's become 8 times. I know the management, the metric they're focusing on is free cash flow, and they've been generating that. But at the EPS level, at the bottom line, it was still a loss of 700 crore in H1. So how are you approaching Meesho?
Well, I think if I'm a long-term investor, I think it is definitely worth taking a bite. A couple of factors. One is the company is free cash flow positive. They are progressing towards turning actually profitable, or keeping in other parameters in mind. Their logistics costs are the cheapest because of Valmo. One factor which I've been noticing is that they have a significant part cash on delivery, COD, and in 3 out of 4 of their COD gets accepted. That means that 1 out of 4 is being rejected. So that has a significant drag on their profitability and performance. I'm sure they will do something to address that. Going forward, I think the scope for expansion, the scope for increasing the business is so huge that I'm reasonably confident that they will continue to perform and outperform many other in this competitive space. So if you are a long-term investor, it's worthwhile looking at it. May not be today because I think it's just got listed today. Let's wait for some time. Let the initial lock-in period get over. Some of the investors will sell. Let them sell. So maybe give it about 15, 20 days, a month, and then look at where it is and think of entering.
Okay. All right. I wanted to ask you about the EMS stocks. What's going on there, Sudeep? Actually, our ticker team is putting out a very valid question. What spooked EMS stocks? In today's trading session, Dixon as well has fallen. I think what happened was PG Electroplast, that guidance, that got cut back. And that's after they raised money, when the promoter sold stake. And now you had Keynes, they did a QIP, they raised money, and now this shocker as well has come about. So after the bounce that we saw yesterday, the stock is actually now 10% lower. Sudeep, what do you make of this? Buy the dip, stay away, there's too much of uncertainty. Even after the correction, actually, the stocks are not cheap at all. What's your take?
Look, I think the kind of valuation at which most of these stocks are quoting, the margin of error is absolutely not there. So any disappointment, any negative news flow is having a accentuated impact on the stock price, and that's pretty much likely to happen going forward. But having said that, I was looking at Keynes, and I've been looking at it for the last few days since the negative news started coming. It was at a 70 multiple. It has come to about 40 multiple. Now, these companies are growing at 30-40% continuously. Now, if somebody is growing at 30-40% and they are enjoying a 40 multiple, I don't think that's too bad. And if you are believing in this growth story and the potential of the entire EMS space, which I do, I think it is worthwhile looking at Kaynes after all this correction. Yes, there was some accounting issue which they have promised to address, and they are addressing. The clarifications have come in. So I would be a little aggressive here and go and buy Kaynes at current level from a 1 year plus perspective. The other stocks have all their own issues and challenges, but specifically on Kaynes, this is my view.
And Dixon's about 50 times forward multiple, FY27. I know at its peak it was 100x plus, but is Dixon also looking attractive after the correction?
I think to an extent, but I think, I don't know why it has corrected so sharply. So I'll probably wait and watch a bit more before I start thinking of buying Dixon. Yes, you're absolutely right. A multiple closer to 40-50 is definitely more palatable compared to 100. Again, I would say if a company is growing at 40-50%, it deserves a multiple like 50. So there is no problem in giving a multiple of 50 to this company, provided there is nothing else hidden here.
Okay. By the way, in a bit from now, we'll get our colleague Madiha as well to tell us what's the latest with Interglobe Aviation. Today, there's been a lot of back and forth in the courts as well. So what started off as a regulatory action scrutiny has now made its way to the court, with the Delhi High Court looking at the entire matter. They've refrained from making any statement on the state of affairs or what caused the whole disruption. But the court has taken very serious cognizance of how the government is handling the matter, the committee that has been set up to probe into the failures that led into the disruption, the week-long disruption that we saw with Indigo's flights. And we'll have Madiha with more details. But the fact of the matter is that the stock has seen a slow grind down. Sudeep, it's very clear that this isn't over. Yes, the network is more or less back, but we know that their winter schedule capacity has been cut back by 10%, and now there is regulatory as well as some legal scrutiny. What would you advise people on Indigo?
Well, absolutely stay away. Because we haven't seen the last of it. Even yesterday I was mentioning in one of your shows that it's definitely not over. Look, the government cannot let this kind of situation continue. They have been fighting tooth and nail and bending over backwards to ensure that there is competition and a third player in the telecom space. And they're doing so much to ensure VI's survival. So in airline, which is equally a critical industry, how can they allow one player with 65% and get into this kind of a mess? So they will do everything possible to ensure their market share comes down to a reasonable level, which is more manageable. And that doesn't augur well for the share price or the shareholders of Indigo. You are enjoying 65% market share. You are at a different level altogether. If that is not allowed, one way or the other, obviously the valuation will correct significantly.
Okay. So that is as far as Interglobe is concerned. By the way, the other overhang for the market continues to be the lack of any clear headway on the India-US trade deal. And today we had the Commerce Minister speak at an event just today. Also, we've heard some statements from the US Trade Representative, Jameson Greer. Now, the Commerce Minister, let's hear out the statement. He again seems to be reiterating that India will not negotiate with any deadlines over our heads. It's something that he said in the past as well. Let's listen into him.
I've said many times that all agreements, all discussions have many different angles. Many dots have to be connected, and we never negotiate deals with deadlines. Thank you.
India is one that comes to mind, particularly for grain sorghum, and yet it's such a difficult country to crack. What is your plan? How do you overcome the?
I have a team over there right now as we speak in New Delhi working on this. There's resistance in India to certain row crops and other meats and products. They're, like you said, they're very difficult nut to crack. I agree with that 100%. But they've been quite forward-leaning. The type of offers they've been talking to us about have been the best we've ever received as a country. So I think that's a viable alternative market.
Well, Hindustan Zinc, that's the outperformer in today's trading session because of a few factors at play. silver prices have hit its highest levels ever at around $60 per ounce, and that explains why that stock is up and about. Well, to give you a couple of numbers then, the gold-silver ratio at the start of this year, well, it had gone to more than 95 times. That has cooled off to sub 70 times. That's gold to silver ratio. And in fact, the ratio that we're seeing sub 70 times, that's the lowest that we have seen in the last 4.5 years, which explains how silver has actually caught up in this rally. At the middle of 2025, actually gold prices were up by more than 40% and silver was lacking with a gain of only around 15%. What's happened since the middle of 2025 is that silver actually has gained more than 60%, while gold is up close to around 25%. So that catch-up trade actually has taken place. Remember, silver has both the qualities, right? It's a precious metal, it's an industrial metal as well, it's used, for green energy as well. So that explains why silver has been doing quite well. And there is likely to be a bit of a deficit that plays out. And the only listed player to play this bounce on silver prices is Hindustan Zinc. And that's why that stock is doing well. To give you another number, the EBIT contribution coming in from silver is 40 to 45%. And going by the kind of pricing we're seeing on silver, well, it could be even higher in the time to come. Remember, we have a rate cut that's in the offing later tonight. So that's what's spurring sentiment as well, because that's what could keep silver as well as gold prices elevated. Hindustan Zinc gains, and because Vedanta has a stake in Hindustan Zinc, well, that as well participating in today's rally. Both those two stocks doing well. Well, let's get in Sudeep's view. Sudeep, what's your view on, I think you have liked Vedanta, if I'm not mistaken, and the stock actually has bounced back, is actually outperforming most metals. It's got a little bit of aluminum as well out there, so silver as well as aluminum. But how would you play this bounce on silver?
Well, Nigel, you and I have discussed Vedanta multiple times, and I've been recommending Vedanta for quite some time. I think, the kind of array of products they have, they are definitely bound to do well in an easy money situation where demand for metal is also going up on the industrial side. So aluminum prices are there at record levels. And we have now the silver prices hitting all-time highs and record levels. So obviously Vedanta benefits, and definitely the other businesses which they have also are not lagging behind too much. Of course, the demerger is a matter of time. I mean, there can be views, but I believe it's a matter of time before it happens. So Vedanta definitely, even now, is worth buying from a slightly longish-term perspective. Value unlocking is going to happen. As far as Hindustan Zinc is concerned, I think it has run up quite a bit. It may run up a little bit more, but there isn't too much, at this stage to buy Hindustan Zinc independently. It has done its bit, and I don't think there is too much upside from here on.
There is a spillover effect of the general, excitement and strength in base metals onto stocks. So it's not just, Hindustan Zinc, Vedanta, but even a Hindalco, a JSW Steel, Tata Steel. These are the only pockets of green that you can see.
Rima, talking about that, since you just briefly spoke about that, I'm going to put out a piece on aluminium. And aluminium for the next 2-3 years looks pretty well placed. And I'll just give you one data point, because China is the big producer, right? They produce 45 million tons of aluminium. And as of this year, they'll end at 44 million tons. They have a cap on the aluminium production. So the fear is China will produce more. But if they're almost at 97%, then they can't really produce more. So aluminium could be the other base metal to look out for in the next year. This year belonged to silver as well as copper. Maybe aluminium for the next couple of years is well placed. And in that case, Hindalco has a near-term issue because of the fire that they had at the Oswego unit. So the next 2 quarters are a washout. Nalco has a problem with regard to alumina, because alumina prices are still soft, though they'll gain on the aluminium side of things. But Vedanta, because they have actually done most of their capex on the backward integration, and they have additional capacity coming on stream. So Mr. Agarwal is a tricky person, but maybe in fact, because they have that demerger and bulk of the SOTP comes in from aluminium, it'll be interesting to see what happens to this particular stock, because aluminium as well as indirect zinc exposure. So just thought I'll weigh in on that. Working on the year-end place.
Interesting. So aluminum, the new silver, the new gold, perhaps.
Do commodity traders call it Ali? Is aluminium called as Ali?
The AL, I mean, Ali.
Ali, I think
of something else.
All right, get into break then.
Yeah, we will take a quick break. Thanks to, of course, Sudeep for being with us this afternoon. We come back with Jitendra Sriram, Senior Fund Manager, Baroda BNP Paribas Mutual Fund, and get some perspective on the market.
Fly Emirates, fly better.
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow.
LIC's annuity plans give annuity options and flexibility in receiving regular income. LIC
slows down. And when you are fast enough, everything becomes still. That's when you see the world as it truly is. Servo Hypersport F5, when speed is your default.
होम EMI 50,000।
आउटगोइंग तो जा रही है, आपकी क्या तैयारी है? पूरे सीलिंग का 20,000। आउटगोइंग है जा रही, आपकी क्या तैयारी?
मौसा जी, मेरी शादी का गिफ्ट।
मनी की आउटगोइंग रहेगी जारी, इसीलिए कर लो तैयारी। SIP के साथ इन्वेस्ट करो और जरूरत पड़ने पर SWP के साथ सिस्टमैटिकली विड्रॉ करो। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
माँ के पैरों की धूल माथे पर लगाओ, परदेश की गलियों में अपने वतन के गीत सुनाओ।
आज लिखेंगे हम अपना कल, जब अपनी सोच को राह मिले, सच तक ले जाएंगे अरमानों को, जब आशाओं को राह मिले, सोच से सच तक चले हम, सोच से सच तक। हर नारी का सपना, हर नारी की शक्ति, ऊर्जा से उन्नति का सफर, हौसला हो अपने दम पर। देश विदेश से जुड़ते रहे, हर मंजिल पाते रहे, मान सम्मान और आयुष्मान। सोच से सच तक चले हम, सोच से सच तक।
यूनियन बैंक ऑफ इंडिया के आसान MSME लोन्स के साथ हर ख्वाहिश सोच से सच तक।
कौन है जो जोड़े देश को? विकसित भारत का विकसित वायर।
मुबारक हो सर, आपका रिटायरमेंट प्लान रेडी है।
थैंक यू।
जिम्मेदारियां हमसे बांटी, हल्का लगेगा। इंडिया फर्स्ट के लाइफ इंश्योरेंस प्लान्स।
चलो चलो AI से पूछते हैं। Do fish get thirsty? If AI will use so much energy, then what is the future of energy?
Infinite clean energy. Avada, always clean, always on.
"26 years of CNBC-TV18.
Welcome back. 700 points lower on the Midcap index. The grind continues. Physics Wala 5% lower. BSE has lost about 9%, 8-9% so far in the last 3 trading sessions. Grow has been under pressure and declining on very large volumes. But to put the spotlight on other stocks that are moving and shaking, Hormis joins in with the list. Hormis.
Oh, well, it has been that kind of a day, right? We started off with some degree of optimism, but then that optimism has not survived for too long. So we'll start off with some gainers that are bucking the trend in an otherwise market that looks wobbly. Venky's is one such name. It's up 12%. At one point was up 16-17. So that too has come off slightly from the highs. The biggest single day gain since August of last year, the third straight day of gains. Volumes today are the highest since June of 2021, and we had over 35 lakh shares that have been traded. The 20-day average is only 18,000 shares. So gains on very strong volumes. The stock is still managing to hold out above its 200-day moving average, which is at 1550, but it is poised for its third year of negative returns in the last 4 years. Now, sugar stocks are having a fairly decent day in today's session, especially considering the market that you are in. Uttam Sugar, Dwarikesh, Balrampur, all of them doing well today, gains of 7 to 9%. And now take a look at the volumes at which they are trading with these kind of gains. Uttam Sugar has seen at least 4 lakh shares that have been traded today. The 20-day average is only 16,000 shares. Dwarikesh 2 trading at 10x its 20-day average. Balrampur trading at 15x its 20-day average. So sugar stocks moving higher on very high volumes as well. But can't say the same for these EMS companies. You take a look at Keynes, down 10, Dixon now down 9, hurtling towards that 10% mark as well, and Amber Enterprises too at one point was up around 1 or 2%, now has given up those gains and now trades 2.5% lower. And on the volumes front as well, the barring Keynes, of course, Keynes was already trading on very high volumes, but Dixon and Amber were fairly quiet, but the volumes have picked up in the last few minutes. Dixon now trades with almost 6.5 lakh shares traded, Amber trades with around 3 lakh shares traded, both of them well above their 20-day average.
Okay, all right, got it. Hormaz, thank you very much for all of those interesting movers and shakers. Plenty of buzzers in the market, and many of the buzzers actually have been on the way down today. Jitendra Sriram, Senior Fund Manager, Baroda PNB Paribas, is joining in. Jitendra, thank you for being with us this afternoon. You know, as we are welcoming you in, the screen is showing a lot of pressure. The Nifty is at 25,750. It's barely trying to hold yesterday's low, and the mid-cap market has started seeing a lot of pain as well. First, on mid-caps, you know, what is your sense? Till now, it's been, of course, mutual fund flows that have, held up the lower end. But now, do you get the sense, are you hearing anything about retail leverage or HNI leverage positions which are beginning to get sold in the market?
My suspicion, and good afternoon to all of you viewers, is that I would think that the first phase of selling came more through in the large caps, mainly because that's the most liquid segment. But I think given the pressure of primary paper supply, all these QIPs and various other things, I think slowly the sell down is starting to percolate into the broader market as well. In fact, if you look at it, the larger market seems to be holding up a lot more stronger now than the mid and small cap indices. So I think there is some rotation happening from the larger cap, from the pressure coming on the larger caps to now it moving more to the wider markets now.
So have you all been lightening up on your mid-cap, small-cap exposure, gravitating more in towards large cap? I mean, considering that the mid-cap index is only up now 3% year to date, small-cap index is down 8-9%. What have you all been doing with your portfolio?
So if I look at the last 6 months itself, on two parameters. First of all, on the issue of earnings resilience, I would say that broadly, if I look at the earnings side, large cap has held up a lot better than the mid and small cap. Mid cap has been a little bit patchy in a sense. There is a bunch of stocks which have actually done quite well, but there is obviously, if I look at the broader index, it has been roughly in sync with the large cap, but obviously the valuations were anticipating a lot more growth, so expectations were a lot richer. Small cap has actually been the worst of the lot in terms of earnings momentum, so it's been a lot lower. So if I were to take numbers, the large cap indices is more closer to a 10% growth rate, whereas if I look at the small cap, it's closer to 5% kind of a number. The second part is on valuations, and if I look at that as well, and if I look at the last 7-year, 8-year min-max of P's that these segments have traded at, I would say that a large cap is somewhere close to the median, whereas the mid and small cap are slightly ahead of the median. So from that aspect also, we feel that the market is slightly getting more pro the large caps compared to the mid and small cap. So it's something that we have consciously been doing, that, you know, we have generally been a little bit more pro large caps than being mid and small cap oriented at this point of time.
All right, hi Jitendra, good afternoon and good to see you in. What do you make of this entire aviation saga? You know, it's hurting customers big time, but as a shareholder, is this providing you an opportunity? After all, we know Interglobe's execution, there's been a lean and a very mean machine as well. Would you believe that this dip that it's providing is actually an entry opportunity? We haven't seen too many airlines that have done what they have done in terms of profitability, in terms of grabbing market share. Your take?
So I would say that the big thing that one needs to consider on the aviation space is that what eventually happens because of these FDTL norms. Because see, right now what the government has given out is basically a 3-month deferral on the FDTL norms. So there'll be certain amount of a negative leverage which will come in there because, if pilot hours, working hours move down from 48 to 36 a week and so on and so forth, you will have to incur a 25% higher cost eventually. So assuming that the full impact of it gets captured in FY27, one will have to rework the numbers towards a higher, pilot cost. Also, the fact that some amount of degree of operating leverage will also be adversely affected for the sector because of the issues that, your ground time will be a little higher and so on and so forth. So I think that is where I think the market is now probably readjusting to a new normal, both in terms of return expectations, the ROEs of the sector and so on. Because if I look at the other major factors, like 1/3 of the sector is basically crude cost, that's been quite benign. So I don't think there's any other external factor which is responsible. It's partly to do with the regulations, the safety features and all that, and market having to evolve and adjust itself to this new normal now.
All right, Jitendra, and it's ironic, right? Because you have the market leader that's in a bit of trouble and there is no alternative. Because even SpiceJet, imagine on a day like this, when a stock, Interglobe, after falling 20% is down another 3%, and still people are not buying SpiceJet. So that's a bit of an issue. I'm hopeful that Mr. Singh will join in and, in fact, gives us some commentary as well in terms of how does he see things pan out for SpiceJet, because their execution has been lacking. That said, before we let you go, we're getting into 2026. I'm guessing this is the last conversation we have in 2025. What's your view getting to 2026? Do you believe that we're likely to be higher? It's going to be a good year for the Indian markets? Or are you a little bit skittish? Because bulk of the year has gone waiting for this trade deal, though the ingredients are in place for much better earnings in 2026. So how do you see things shape up?
No, I think the broader market should look up. So in a sense that your valuations are more closer to the median, as I mentioned, and you have earnings momentum slowly starting to come back. So the most powerful ingredients are already there. And if I look at from a global context also, it is very likely that the Fed will continue on its rate cut trajectory going forward. So which should generally be positive for EMs as such. So hopefully that should also give some stability from a flow perspective from the FIS side. So I would be broadly constructive on markets from here on. But the sectors which could perform now could be very different, like metals, exporters, those kind of things which could end up doing far better than traditional domestic oriented sectors.
Got it. Okay, all right, Jitendra. Thanks a lot for joining in. We end the conversation on an optimistic note, and hopefully things pan out in that manner. Chat up in 2026. Well, time to slip into a short break. On the other side, we'll get you some technical calls. Don't go anywhere.
"26 years of CNBC-TV18.
You want to talk business? Meet me in the Onboard Lounge.
Nephrocare Health Services Limited, India's and Asia's largest dialysis services provider, offering comprehensive dialysis care through a network of clinics, from diagnosis to treatment and wellness programs, now makes an initial public offering of equity shares of face value of ₹2 each for cash at a premium. The 100% book-built offer, being offered in a price band of 438 to 460 rupees per equity share, opens December 10th, 2025 and closes December 12th, 2025. For risk factors and details, refer to the red heading prospectus.
आपके कलीग्स भी आपका परिवार है। इनकी सेफ्टी से समझौता? नो चांस। इसीलिए पॉलीकैप ग्रीन वायर्स, इनके सुपीरियर इंसुलेशन इमरजेंसी में दे कम धुआं। पॉलीकैप ग्रीन वायर्स, इंडिया सेफ हैप्पी कनेक्शन।
बुलिश ऑन इंडिया, देखो बढ़ रहे कदम। बुलिश ऑन इंडिया, फ्यूचर के लिए है तैयार।
Crores of Indians believe in the nation's financial growth. So do we at ICICI Prudential Asset Management Company Limited, along with our 1.5 crore investors. Together, we are bullish on India.
आराम से हाँ। सामान देना भैया।
अब आगे क्या करना है? वो पिट्टू की पर्ची में देखो ना, कहाँ गई पर्ची?
नमस्ते
जी।
हाँ? मुझे पता है वो पर्ची में क्या लिखा होता है। आप चलिए मेरे साथ। व्हीलचेयर, ये आपका और ये
हाँ।
आपका। पर्ची में शॉपिंग के बाद तो जरूर लिखी होती है। थोड़ी पेट पूजा की बात कोई पर्ची में ना लिखे, ऐसा हो सकता है?
टिफिन
थैंक यू।
अरे पर्ची मिल गई।
पर्ची में तो ये सब लिखा ही नहीं था।
हम है ना आपकी पर्ची।
सिर्फ वर्ल्ड क्लास एयरपोर्ट्स नहीं चलाते हैं, आपके सफर में हम सफर बन जाते हैं। अदानी, हम करके दिखाते हैं।
World over, bond markets are far bigger than equity markets. And it is time they made headlines in India too. Bond Street, that's our new offering. We bring the Indian bond markets into clear focus with sharper insights, cleaner signals, and a direct understanding. This is your guide to the asset class, anchoring India's next phase of growth.
CNBC-TV18 and India Bonds present Bond Street. Track the daily pulse of India's bond market only on CNBC-TV18.
Park Medi World Limited proposes an initial public offering of its equity shares. The 100% book build offer is being offered at a price band of rupees 154 to rupees 162 per equity share of face value of rupees 2 each. Bid offer opens on Wednesday, December 10th, 2025. Bid offer closes on Friday, December 12th, 2025. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, the SEBI, the BRLMs, and the stock exchanges.
We have carefully reviewed your performance and promoting you to branch manager.
Sir. Hello, Motilal Oswal.
When life goes to the next level, download Rise by Motilal Oswal. Investments and securities market are subject to market risks. Read all the related documents carefully before investing.
26 years of CNBC TV18.
Welcome back. IT stocks are dragging their feet, and now even the likes of Coforge and Persistent, which have been outperformers and giving you returns over the last 1 year, they've turned negative for the last 1 year. So Persistent is now down close to about 5% in the last 1 year. Coforge is completely flattened out. So I guess money is also being taken out of where money has been made. So even some of these wealth creators in the mid-cap space are dragging their feet. But let's find out what's happening in the futures and options space. Nigel has moved over to the F&O desk.
Well, Rima, we are in a bit of a range, a 400-point range, a tight range in the near term. And as that range comes up for you on the screen, you can see we're trending closer to the lower end of the range at around 25,700 or thereabouts. The session's low, though, both of yesterday as well as today, tell you that the 25,730 mark is important. And by just a whisker, we prevented making a lower low today in comparison to yesterday. And I like to look at things positively. So I believe if we don't get a very, very hawkish cut coming in from the Fed, then maybe at least on the headline index, you have some support coming in there. The reason I say that is because there are shots in the system from the FIs, and the PCR yet again is closer to the lower end of the range at around 0.74 odd. Now, the call writing is aggressive. 25,900 call aggressive writing out there. Take a look at the premium. It's down 35%. As is the case with the 26,000 call as well, the writers, they believe that the higher levels are protected. And now the lower puts are opening up. Case in point being the 25,500 put, there is a sense of buying out there. The premium has moved up marginally. The last time I checked, it was in that vicinity of around 34 rupees odd. So someone taking a bit of a punt, if you're going to get a very hawkish sounding Fed, and in fact this market correction is going to continue, then you'll make money for those that are buying that particular strike. Individual stocks, they're doing a thing of their own. AU Small Finance, there is fresh buying being seen out there. The stock holding strong in an otherwise wobbly market. And that one, in fact, you're seeing a good amount of open interest build up. Tisco is doing a bit of a disco today because the markets are weak, but that stock, in fact, is holding in the green. It's already corrected more than 10% from the recent peak. There's a bout of short covering that's taking place on that one. And the ripple effect of what's happened on Keynes is continuing in Dixon Technologies. Hopefully, we get the management in the next few days, and they can clarify about how the quarter is panning out and what's the path ahead from here on. But clearly, there is some fresh shorting that we're seeing on that particular name. While on PB Fintech, the stock is down, but there's massive shedding in terms of open interest on that low base. So unwinding of positions is what we're seeing. 25,700, extremely important mark that we defend, on a closing basis today. And hopefully we don't breach yesterday's low as well. But things looking a little bit skittish.
Looking skittish, but at least it's stabilized now. So in the last half an hour or so, the slide has been arrested. Still reeling with a cut of about 80 odd points, but it's not gotten worse. Small mercies. Mitesh Thakkar from Bonanza Portfolio is now joining in for a few BTST calls. Mitesh, what do you have for us?
No, actually, Reema, I have more of STVT calls, the way the market is shaping up. Despite the fact that we are kind of holding on to yesterday's low, a lot of stocks have given negative setups, So Mazgaon Dock is a STVT with a stop at 24.52 for targets of around 2,400. And AI industry, that's another one which is breaking down. So that's STVT with a stop at 39.75 for targets of 39.10.
Thank you very much for that. Let's put the attention back on Interglobe Aviation. Everyone wants to know what's happening now. And what we understand is that key airline officials have been summoned tomorrow, while Delhi High Court has also passed some observations on the issue. Madiha is here to get us up to speed. Madiha.
Well, there are three major updates that we are tracking. First, the Civil Aviation Ministry has directed Indigo to cut 10% of its winter schedule. But what we now need to see is whether this cut will actually affect existing flights, because Indigo had sought additional slots for the winter season. And the bigger question is, can the government really afford to cut capacity in a market where demand is at record highs and no other airline has the spare fleet to absorb passengers? Second, Indigo CEO, as you were mentioning, along with senior officials from every key department, has been summoned by the DGCA on December 11th at 3 p.m. The regulator wants Indigo to present a clear update on 6 areas: flight restoration, pilot and crew recruitment, refunds for cancellations, baggage return, timely information to passengers on cancellations and flights, and rerouting of disrupted passengers. This is the strongest monitoring Indigo has faced in years. And the third, that our colleague Ashmit Kumar has been reporting, the Delhi High Court has made some sharp observations. The court asked the government why, instead of taking action against Indigo, it has given the airline more time to comply with the new FDTL norms. The judges questioned whether the government is helpless when an airline fails to hire enough pilots or gives an inaccurate picture of crew availability. The DGC and the ministry told the court that the exemption to Indigo was given unhappily and reluctantly, because without it, the collapse would have had a cascading effect across Indian aviation. They've also made it clear that the exemption can be withdrawn at any time. Reviews will take place every 15 days, and they expect flight schedules to stabilize by tomorrow with complete restoration in about 3 days. They stressed that this is not a knee-jerk moment and that public interest must remain the top priority.
Okay, all right, Madiha, thank you very much for that. So lots of sensitivities obviously surrounding all the developments here, including what happened in the courts today. Thank you for joining in. The stock is still under pressure, down about 3.5%. As perhaps, it seems that it's not all clear or all blue skies just yet for Indigo. Again, Mayuresh Joshi from William O'Neill is with us. Mayuresh, thank you for joining in. So Interglobe, once a much-loved stock. I mean, no two ways about that, no arguing against that. But given the developments, you're also getting it at a substantial discount now. Would you be a buyer?
Afternoon, Surabhi. No, again, I think it's falling off like a sharp knife off the cliff. And therefore, I think the expectation largely is that with all the news that is now getting surrounded from a regulatory perspective, in fact, a lot of their management might have to answer a lot of tough questions on what really happened. The operating routes have been cut down for the following few weeks as well. But the fact still remains structurally for the industry as a whole that no new aircraft additions are probably happening at this juncture. It is very difficult to procure new aircraft, obviously on a sale and leaseback basis, because a lot of aircraft manufacturers, including the likes of Airbus and Boeing's, are having their own sweet issues in terms of machine parts. And the third element obviously remains is that in the midst of all this, what probably happens in terms of the cap on pricing, does this now continue over a longer period of time, which probably increases fixed cost to a certain extent, and pricing getting capped might mean revenues probably become a little bit more unpredictable going forward as well across routes. So I think it's a wait and watch will be putting all these things in perspective.
You know, I was just recently listening to a very interesting explanation why Interglobe Aviation became such a dominant player. It was done very organically. And, you know, there are a couple of reasons. One of them is that Interglobe Aviation bought they leased all their aircraft in bulk.
Yeah.
So they got that bulk discount, which helped them. Unlike, say, a SpiceJet or, you know, the others, which leased it, you know, step by step. That's one. Two, Interglobe Aviation only leased, Airbus 320. So unlike the others, which had Boeing and Airbus, Interglobe only stuck to one. So any engineer, any pilot is fungible. And third, of course, as we know, is the turnaround time.
Yeah.
So ideally, you know, planes were lying idle for, say, 1 hour between flights, 45 minutes. Interglobe Aviation made efficiency, a DNA, and they helped turn around. So these were three factors which actually helped Interglobe Aviation. It wasn't a policy misstep, say, in the case of, say, telecom, you know, for instance, which resulted in some players being dominant. In the case of Interglobe Aviation, it was actually strategy. So I just thought, you know, it was a little more interesting.
Yeah, no, absolutely. I mean, and that strategy worked very well for them. It served them
Till
good.
it didn't.
Till it didn't, perhaps. And that's exactly what, the committee, high-powered committee, is now going to be looking at, investigating. But Mayurish is saying stay away from Indigo for now, at least. Okay, now, as far as the big global development is concerned, of course, it's going to be all eyes on the US Federal Reserve. The market is going with an expectation of a 25 basis points rate cut. Here's Steve Leisman with the findings of the CNBC Fed survey.
The CNBC Fed survey showing or expecting a hawkish cut, that is a cut followed by a pause, but also showing deep divisions over whether the Fed should cut at all, likely reflecting the same split on the committee. Take a look. 87% think the Fed will cut this week, but only 45% think the Fed should cut. That's a kind of historic differential there for our survey. 2 dissents are expected. That's the median. And only 35% are expecting a rate cut come January. Scott Wren of Wells Fargo Investment Institute writes in, the Fed will cut in December, even though you can make a very rational argument that they should not do anything. The biggest risks out there to the economy, well, continued high inflation, sort of surging to the top. It had been number 4. The AI bubble bursting, that's been there, or that's a new entrant there. The concern about Fed independence, the fiscal deficit, and administrative policy uncertainty rounding out the top 5 risks to the economy. Meanwhile, the growth outlook has been ticking up, running at 2% this year and higher next year, while inflation forecasts to remain above the 2% target. So that's part of the problem there. Diane Swank, chief economist, KPMG, says most are underappreciating the likely stimulus due to record tax refunds in the first half of 2026. That means we're also likely understating the risk that inflation could stick. And not much downside here seen in the job market, with the unemployment rate rising only a few tenths, or forecast to do so next year, and declining a bit in 2027. Still, several respondents are saying the Fed needs to cut here because of potential weakness in the job market. Alan Sinai of Decision Economics writes in, the Federal Reserve is behind the curve again, this time on the widespread weakening of the labor market. A preemptive 50 basis point cut in the federal funds rate is the right thing to do. And that maybe explains what motivates the cut at this meeting. The greater risk, or the belief on the Fed that the greater risk is that when all this data finally come out, and that is next week, it's going to show a weak labor market more than the risk that it's going to show higher inflation.
Well, that is a big event to watch. For now, it's time for a short break. We'll come back with more. Stay tuned.
"26 years of CNBC-TV18.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
Alabak Medi World Limited proposes an initial public offering of its equity shares. The 100% book-built offer is being offered at a price band of rupees 154 to rupees 162 per equity share of face value of rupees 2 each. Bid offer opens on Wednesday, December 10th, 2025. Bid offer closes on Friday, December 12, 2025. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, the SEBI, the BRLMs, and the stock exchanges.
चलो चलो AI से पूछते हैं. Do fish get thirsty? If AI will use so much energy, then what is the future of energy?
Infinite clean energy. Avada, always clean, always on.
कौन है जो जोड़े देश को? विकसित भारत का विकसित वायर।
आज लिखेंगे हम अपना कल, जब अपनी सोच को राह मिले, सच तक ले जाएंगे अरमानों को, जब आशाओं को राह मिले, सोच से सच तक चले हम, सोच से सच तक। हर नारी का सपना, हर नारी की शक्ति, ऊर्जा से उन्नति का सफर, हौसला हो अपने दम पर, देश विदेश से जुड़ते रहे, हर मंजिल पाते रहे, मान सम्मान और आयुष्मान, सोच से सच तक चले हम, सोच से सच तक।
यूनियन बैंक ऑफ इंडिया के आसान MSME लोन्स के साथ हर ख्वाहिश सोच से सच तक।
Well, that's the holiday of it.
Thank you.
When you fly Emirates, your holiday isn't over until your flight is over.
लखनऊ के लिए जाने वाली अवध एक्सप्रेस प्लेटफॉर्म नंबर 2 पर आएगी। गोवा के लिए स्टार क्रूज प्लेटफॉर्म नंबर 2 से ही जाएगा।
ये सब आपको एक प्लेटफॉर्म पर मिले ना मिले, पर शेयर इंडिया प्लेटफॉर्म पे आपको इक्विटीज, डेरिवेटिव्स, कमोडिटीज, इंश्योरेंस, म्यूचुअल फंड्स और एल्गो ट्रेडिंग एक साथ मिलेगी। शेयर इंडिया, डाउनलोड द ऐप नाउ।
Investments in securities markets are subject to market risk. Read all related documents carefully before investing.
26 years of CNBC-TV18.
Welcome back. Markets down, Nifty Bank down, Midcap index as well down. So it's a bit of a red day, but a few stocks are trading in the green. I think Lloyd Metal, one of those beautiful stocks that rallied, I think, in the last 4 years from around 150 to around 1,600 rupees. And from the top, it's seen some kind of selling. The street is waiting by to hear about news with regard to a possible JV or some kind of agreement with Tata Steel that will help them in terms of evacuation of that, iron ore as well that they're going to be likely mining in the coming year. So on the back of those hopes, I think the stock is holding up with a gain of close to around 3%. The street has been sniffing this, expecting an announcement rather soon. So that explains why that name, in fact, is holding up. Let's get in Mayuresh. Mayuresh, any view on this name, Lloyd Metals or any other metal stock that you like? Some of these, when they turn around, they do very, very well. Lloyd Metal, I recall, was heavily into debt. They turned around and wow, what a turnaround indeed. Jaiswal Nico, another one that we have explained around 40-45 rupees earlier. The stock actually has corrected from 85 rupees to 70 rupees, but it's still much higher from the lows that we saw earlier this year. So any of these stocks you like?
No, I think from the metals pack, obviously, I think Naveli Lignite, NLC India, is something that we've kept on our watch list and radar. Our own expectations and take is that offtake will improve quite significantly. They already have alliance shares in terms of lignite production and the mines that they probably own. But this can be significantly better in the plan that they have envisaged over the next 5 to 8 years. In terms of the capacities, as far as power is concerned, renewables are expected to increase multifold. Thermal also is expected to increase significantly, and all that capex, which is expected to happen, a large part of that will be through internal accruals. The best part about the operating leverage component, Nigel, for NLC India will be the margins. They are doing 38% as we speak for the last financial year. They're expecting to close FY27 with all the changes in place at 45% and 50% by FY30 with everything that transpires. So this is one stock that we definitely have on our watch list and radar. Lloyd's that you mentioned, I think very good numbers in the quarter gone by. Obviously, I think the expectations in terms of iron ore volumes should be significantly higher going forward. The commencement of their DRI expansion project should help them quite significantly. And the management probably believes that the EBITDA margins should get maintained between 33 and 35%. Because of the better product stroke value-added mix that they'll probably get on their books. So I think interesting story, but within the metals pack, NLC India remains on the list.
Okay, this is a rapid fire, Mayuresh. Canes, 50% off its 52-week high. Are you buying or no?
Since it's a rapid fire, no, not at this juncture.
Not at this juncture. PG Electro, also off almost 30 to 40% of the peak.
No, not at this juncture as well.
Okay.
Meesho?
So Rima Bhav Bhagwan che, and I think even I would probably a little bit circumspect. Beautiful model, structural story, etc. But I think we'll still.
So not as of now. We have to get one buy idea from him. Yes,
BSE 15% off the peak.
Like MCX Small, should be.
Like MCX Small. Okay, there we've got one buy.
You want to give us one more buy idea? One MCX he likes.
And
one more.
Apollo Tyres on our watch list, Rima.
Apollo Tyres on the watch list. Okay, that usually we see, right? Threes, Ija, Bija, Tija type.
Okay, so
we got that.
We have a trio from Mayuresh. Mayuresh, thank you so much for that. With that is also curtains on today's market action. Almost hitting the bell now, and it's going to be classified as a weekday. A bit of a disappointing day because the bulls could not really reclaim any lost ground. The saving grace is that at least yesterday's low has been protected. But otherwise, just all-round weakness. And the mid-cap index is ending with a cut of 1.25%. So at the session lows, small-cap index is also really weak. Advanced decline ratio is quite negative. On the Nifty, if we talk about the weak hands, then Eternal, Interglobe Aviation, Trent, Adani Enterprises. See, it's cutting across sectors. TCS and Infosys from IT, ICICI Bank and HDFC Bank from the financials. So plenty of weakness. What saved the market really was the fact that at least Reliance and ITC, they were providing some support. Both were in positive territory. And then we've seen some buying on Eicher Motors, on Hindalco, and on Tata Steel as well today. But overall, 90 points lower on the Nifty.
90 lower on the Nifty, while the mid-cap index, it was 750 points lower with an advanced decline ratio tilting in favor of the stocks declining. So very disappointing.